Good morning. It's July 6, 2019. This is Ron Brown. I hope you all had a happy 4th of July. This week, or in this video and going forward, I'm going to be concentrating a lot more on volume price analysis, volume spread analysis. They are one and the same, different terminology, but the concepts are pretty much the same. Over the past few weeks, I have gone back and gone over some of the material that I've accumulated over the years and spent some time with Tom Williams' teachings. Tom Williams was the first to computerize volume spread analysis in TradeGuider. Tom didn't do it. He wasn't a programmer, but he hired the programming done. He implemented the concepts and or told his programmers about what he was trying to implement, and they went ahead and created the program, which has been around for quite some time. Obviously, I don't use it anymore because I use HGSI, but his teachings were some of the best. He has a Wyckoff I should say, Tom passed away a couple of years ago, had a Wyckoff background, and he was a very successful trader in stocks and commodities and about anything else he could trade. One of his students is a man in England named Philip Friston, who is a very good teacher of VSA. They call their version VSA, volume spread analysis, and I've been reading some of his material, and I'm going to incorporate their ideas into HGSI and my teachings. What I'm using here, first of all, as many of you know, I use a software program called Max2 to set up my layouts, and then I have a weekly chart on the left portion of the top and a daily chart on the right portion. And then down at the bottom I have the warehouse view. Now I am using these two charts under Ron Brown end of day charts, and they're also under the intraday charts. There are two bar charts. One's a daily chart, one's a weekly chart. And this is what I'm beginning with, and I think you'll see why. First of all, I get a lot of information on here. It's easier to draw trend lines and so on, and that's what I'm going to be doing now. This is the most recent HGSI Top 50. This is generated every night. I'm going to go to Choose Group. And this would be from Friday the 5th. And these are the most recent stocks. You can see that, I don't know why there are 49. There are 51 evidently didn't pass the filter. So I'll reapply the filter. I'm not going to look to see which one it was. And these are the stocks that pass. Now you can get a quick read on the groups that are in here by opening the spectrum analyzer and clicking on that. You can see there are 6 consumer finance, 6 application software, airlines are strong, and so on. What I've done, or what I'm going to do, is select a stock here. In-phase energy, this is a stock that I've been in and out of. I should be back in it, but since I took most of last week off, I didn't want to carry positions, so I'm currently out of it, but I think I'll use it as an example. In the webinars in the future and most of the videos, I'm going to try to stick to this format primarily. So what I did is I clicked on in-phase energy, and you can see that on the weekly chart it is very strong, and it's very strong on the daily chart. Now when you see extreme volume spikes like this, and this is a Tom Williams method and Philip Friston, they both adhere to this. When you see exceptionally strong volume, and this would be exceptionally strong, that means that the professional money or the professional traders are involved. And you can see that this happened. Let me put up my crosshair on the gap up when some evidently some news came out on in phase. I know there was news, I don't remember what it was, but that was a lot of professional money coming into this stock, and that was around the $12 level. Now here is a high volume bar to the downside, and this is red only because the volume is connected to the open versus close on the price. I'm going to edit the indicator, show you on the volume. You have two choices. You can compute multicolor from open to close or last close to current close. If I change that to last close to current close, it would still be red because the current close on this was less than the prior day's close. But my standard way of looking at volume is, need to get back in the right place. I use the open to close on all of my charts. Primarily because that's the way they do it for candlesticks, and most of my charts are candlestick charts. But for this purpose and for analysis, I think the bar charts actually work better. Now, one of Tom Williams' teachings, other than looking for huge volume spikes, is to look from the left side of the chart to the right side of the chart. In fact, his method of doing it, of analysis, was to start on the left and work your way to the right. Now, what's the purpose of that? Well, the purpose of that is you want to mark up the chart. You want to draw trend lines. And I'm going to use the annotations toolbar in HGSI, and I'm going to use this extended line, and I'm clicking on these two windows. I'm going to select red to begin with, and the reason I'm selecting red is I didn't do that correctly. I'm going clear back to 1215 here, and I'm holding my shift key. And what this does is it allows me to draw an extended line, and it will continue to extend itself to the right hand side. These will be dotted going into the future. Now, that is a single point here. You can see that it over in this area, it comes through this congestion area. I think I'll move this down a little bit. These are subjective, of course. And if I took it all the way down here to the breakout level, which would be somewhere in here, here's your resistance all the way across here, and then it was resistance again at this point, and then it finally broke through. Notice how the volume is starting to come into the stock. It started back here, then it got quiet, and then here's a nice volume spikes up here, and then at this point very heavy volume. So I'm going to go back here. This is a nice thing about HGSI. You can scroll back, and I want to look at the volume bars during this period, and you can see that there was a lot of activity. These could be considered heavier volume spikes here. This was a heavy volume spike also. I'm going to get this out of the way. But look where the bar closed. It closed midway. So that was not showing a lot of strength. Just because there's professional activity or a lot of money flowing in, you can't just judge it on that. You have to understand where the bar closed, and you can see there was some very short-term profit taking there. Now these were relative to these over here, these bars were very strong. Here is an extreme bar, but once again, here's the open. Look where it closed. So there was some short-term profit taking. I would consider this a neutral bar. This was a strong bar the following day with pretty heavy volume. And then this is a weak bar. Why is it a weak bar? Because look where it closes in the daily range. This could be considered a strong bar. This is a weak bar. See where it closed in the daily. I'm sorry, I'm on the weekly chart. The weekly range. I'm saying daily and I should be saying weekly. But then there was some selling. Professional activity here too, because the stock sold off on heavier volume. Going to get out of here. I'm going to move all the way to the right on this weekly chart. So this was the breakout point. Now I'm going to change this to green because it was resistance and then it became support. You can see it went up here. The stock traded down to this, near this area. It didn't get all the way down. These were pretty weak bars. I'm going to put a frame on here if I can. And for the most part, on the going down, you can see the volume was light. And then not much volume in here. What happens over here? You can see that these, I'll go back here. I'll take these one at a time. Remember, we're talking weekly here. At this point, I'm going to draw another trend line. I'm going to make this one red because it ran into resistance. I have to get it on the trend tool. Hold this down. So it got up here. You can see that this is a strong bar because it closed near the high of the range. This is a weak bar because it closed towards the bottom quarter. A strong bar, but if I put my crosshair on, a strong bar, you can see that it was on very light volume. And then this is a weak bar at the top because it opened here, traded up to here, and closed where it opened. The volume on that day had picked up. This bar is green because the close is slightly greater than the open. In fact, if you look over here, it's hard to see on there, but if you look over here, you can see the open was 703, the close was 704. So essentially, the open and close are the same, but that generated a green volume bar because it was a penny higher. So that was a price rejection up here, followed by a weak bar, another weaker bar. Volume was picking up as traders were bailing out. This was a strong bar, open here, close here, but on a very weak volume day. And then it just drifted down here. Neutral bar, weak bar, weak bar, weak bar, and then a strong bar on heavier volume. At this point, you could see that volume was coming in and it closed near the high. Next day's a strong bar on heavy volume, and then we have a weak bar, neutral bar, weak bar, but during this period, notice how the volume has fallen off. This is a weak bar here on very light volume. So this one opened here, this bar opened here, closed here, strong bar, opened here, traded down, closed here on increasing volume. We have some weakness here on a couple of bars, but notice that the volume was light. This is considered a weak bar here. This would be, yeah, it's weak because it's barely, on this week it barely closed above its open. Neutral, down, weak bar there on slightly heavier volume. And then the next week, volume went really very quiet. Uh, Neutral bar, strong bar, strong bar, volumes picking up slightly. And then here you can see the volume increased and there was a strong bar. And then we started seeing a series of stronger bars. What these bars tell us, or candles, whatever you prefer to look at, it is that it gives us an insight if demand is increasing, if demand is neutral, or if supply is increasing. When you have a weak bar like this, and on heavy volume, and you see before that you see these bars stalling out, that means supply is coming in to the stock. When you start seeing higher lows like this, you always have to evaluate the volume, and you want to look back here. What's in the background? The background here is that support is holding above the horizontal trend line. This is why Tom Williams suggested looking, first of all, you should look at two different time frames. And if you're using daily charts primarily, you should be using weekly charts also. But you want to know what has happened in the background. So as this stock came down into this area, there should be support on this or with this horizontal line here, and that's exactly what happened. And then a series of higher lows and higher highs started forming, and you could or we can see that it moved up here, and when it got to this resistance point where this trend line, this horizontal line was drawn, it blew through there with some strong bars, and volume was increasing. And from there, the stock took off primarily with strong bars. If the bar closes on the weekly range, if the range is, I like to use 2/3 if the close is 2/3 above the or not above. If it's 2/3 the way up the bar, I consider that a strong close. Between 2/3 and 1/3 would be in the neutral area, and then below 1/3 would be a weak close. But these bars give us a very good idea if demand is overcoming supply, and that's what VSA and VPA and Wyckoff is really all about. And then you bring the volume into play also. Now, just out of curiosity, you can edit the indicator, go to volume price analysis with your right key. You can draw the VPA flags on the chart, and let's see how they correspond here. I'm not going to go through every one of these, but you can see that on these low areas that there were some bullish candles coming in. When it got a little bit extended up here, you can see that there are several negative VPA flags. Here is a effort to rise on pretty decent volume, another effort to rise here on this volume. Here is a test followed by a confirmation of that test with the VPA or with the effort to rise. Same thing here. A little bit later, here's your effort to rise, effort to rise. This is, you can see this is a neutral bar with the red circle kind of indecisive at that point. That corresponds to this red spike here. And then it got up here a few weeks ago. Notice that this is a weak bar, and there were two negative flags. And now it's turning around. No flags here, but you can see that this is a strong candle from the prior week and from last week also on good volume. I'm going to turn the flags off, edit indicator, volume price analysis, and that's it. Now, notice that there's nothing on the daily chart, and I don't know if there's another way to do this or not, but I'm going to close HGSI, and then I'm going to reopen it. And the charts come back up. But notice this is a weekly chart. They're both weekly charts. I'm going to make this one the daily chart. And after I close it and reopen it, notice that the horizontal trend lines are also on the daily chart. Also, if I move up to my basic end of day charts, not my base, I'm sorry, my quick start end of day charts, go to chart number 4. Yeah, you can see that the any chart, a plain white chart with the same background, and I'm not exactly sure how this works, so I'm not going to say, but these trend lines are going to be on here automatically. Even though I drew this on the weekly chart, notice it's a clean white background on all these, so the trend lines, support and resistance lines, I should say, these are really not trends. They do show through on all the charts. This is very helpful because you can see what's in the background. I'm going to make this large again. This is a really steep trend line. If I were to draw a trend line here, I'm just going to show you, though. You can go from the I'm going to fan this out like that. I'll do this one more time. See, it doesn't appear here, but if I go to the main menu, close it down here, open these up, you can see it reverted to a bar chart here, a weekly bar chart. I'm going to go to my quick start, end of day, stock index charts 4. And notice that these weekly trend lines are transferred over to the daily chart. And they'll just, they'll stay there forever, and these dotted lines will continue to grow as more data comes in. The solid red lines will remain where they are, but if this stock continues higher, you'll know where support is. Well, even if it doesn't continue high, you'll know where support is. Now, you can see that this trend line that I drew was to the bottom of this bar right here. Let's see what this looks like if I make this a weekly chart. And you can see that it corresponds to this over here. So by looking or using the background with trend lines and so on, you know what is in the past, and this stock has broken out to a new all-time high, I believe. No, yes, it did make it. It did make it past here. So you know exactly what's in the background right now. There is little resistance to in-phase energy, and this is a stock which is showing increased revenue and increased earnings, has a RS rank of 95 and a group rank of 98. Still looks good. This was a little pullback here to shake people out, and let me take this up here. Let's take a closer look at this. This was an effort to fall. If I put my crosshair on here, yeah, the volume was up, but it wasn't excessive. And then it was approaching this trend line, and trend lines are subjective, as you can see. But it was getting down here, and then there was an inside day the following day on relatively light volume. So weak or neutral, weak, weak, weak. Inside day is a strong bar, and then this was followed by an effort to rise on relatively light volume, and then you can see more volume coming in. On this down day, the volume was much less than the prior day. It closed maybe 25% up the candle, and then there was a test. Tests are very important. What tests determine is if there is supply below the market. It opened here, traded down, and closed near the high, so that's a low volume test, which is a sign of strength. And then it moved up and moved past resistance on Friday. That's it for this video. I don't want it to get too long, but I'm planning to do a webinar this week, probably on Thursday. I'll let you know, and we'll continue talking about, or I'll continue talking about VPA, VSA, and strong and weak bars using the background. It takes time to do analysis that way, but it's really worth the effort because it will open up your eyes to where the strength and weakness is. Thanks for listening.